about $9 billion of funds raised in 2020, over 900 deals, $10 million per transaction. And I noticed like over 200 companies did more than one transaction in 2020.
Welcome viewers to our panel discussion on the role of exploration and some of the finance trends currently within the sector. This video forms part of our suite of content curated for one-to-one mining investment Africa online. I'm very pleased to bring together a panel of executives with a breadth of mining sector expertise, particularly in delivering early stage exploration success. It's my pleasure to welcome the participants then: Glen Parsons, CEO of Awale Resources; Steve Poulton, CEO of Altus Strategies; Heye Daun, CEO of Osino Resources; Hugh Stuart, CEO of Montage Gold; and Joe Mazumdar, who's an economic geologist and editor of Exploration Insights. Joe, thanks for taking the lead on this discussion as well. I believe you're going to kick us off with a snapshot of some of the exploration finance trends at present, set the scene. So I'll hand over to you to take us through from here. Thanks, Joe.
Great. Thank you very much, Adam. And thank you to One for putting this together. I'm just going to share my screen just real quick. And hang on. Okay. Oops, sorry. Okay, there we go. So this is the panel during the pre-Indaba that's usually in Cape Town, but now everything is virtual. So we're dealing with it on Zoom. So this is the main topic. These guys probably have a lot to talk about with respect to geology, exploration, and that. We're going to focus in on funding and financing these projects in Africa. And so just a little bit of background, last year, in terms of just the TSX venture, this is data to the end of November versus the end of November in 2019. So you could see that there were less IPOs, less new issuers, which is usually good, for the ventures, especially for mining companies, which, tend to do juniors take up a lot of space and oxygen in that equity market. So, but importantly, the ones that did raised more money, 275% more. They raised about 200 million. The total number of financings was up about 25% to over 1,500, and they raised about 50% more money, about $5.7 billion. And this not only includes mining, that includes other resource and anything listed on the venture, but the venture tends to be dominated by the junior miners, so it's not a bad proxy. And so the valuation of these companies has also gone up, 60%. So all looking positive for the companies listed on the venture. Okay, so I did my own numbers, and my numbers are different because it includes the Toronto Stock Exchange as well as the venture, and so there's bigger financings there. Anything over $1 million I looked at, and so this was, I calculated, estimate about $9 billion of funds raised in 2020, over 900 deals, $10 million per transaction. And I noticed like over 200 companies did more than one transaction in 2020. And then most of the funding went to gold, but between gold, copper, and silver, that took well over 80% of the financing. And what's interesting to me as well is, like, usually you see funding, the seasonality in North America is to fund in January, February, right before the field season. We did see a pickup in February, but what's interesting is the summer through June and August was some of the biggest months of financings, where we saw well over 100 transactions per month, raising well over $1 billion, and then also we saw another pickup in December, which is pretty unusual as people are sort of winding down. Okay, and so getting back to the companies we have here, like Adam said, we got Montage Gold, which is basically a company spun out of Orca Gold. Hugh Stuart is running that company, and that's located in Cote d'Ivoire. We got Osino Resources, Heye Daun as a CEO, and that's in Namibia, and that's advanced exploration looking to go into development. Altus strategy is a bit different sort of game plan, more of a prospect and royalty generator. And then lastly is the grassroots explorer Awale Resources, again in Cote d'Ivoire. And so you have a little bit of data. We're not going to go through it in terms of, you know, their outstanding shares, fully diluted and that, and how they did year to date. But importantly, you know, cumulatively, these companies raised money. They raised about $40 million last year. And so what I want to get into right now is that, you know, a lot of, you know, African assets trying to, you know, raise funds for an Africa focused company. So I want to go through each one of the participants to ask, you know, is that more difficult? Has it become easier last year? You know, how has it been? So I'll start going with Glen Parsons of Awale.
Yeah, thanks, Joe. I think for us, I mean, if you look at the, you know, the suite of companies there, we started as greenfields exploration, so probably at the harder end. So just to say, pure Africa, you know, is that a difficulty? Is quite comparable in a sense. However, there's no doubt when we raised our money, and we have, you know, we have a very diverse investor base that really started, you know, institutions wouldn't come into an early, you know, a really early stage greenfields explorer like us. But the market, certainly we still see the market change, to see the development we've made on the ground, and therefore has given us an ability to attract investors. When we raised money in June, around there, June, July, as you said. Certainly that was a good time to raise, and we took advantage of that. And then we did see, in specifically Cote d'Ivoire, you know, going into October, we did go through an election period. And that's where we did see a much more volatility coming through our stock. So it didn't have an effect on the actual raise, but it had a follow-on effect in terms of a little bit of uncertainty, you know, West African uncertainty. So it does have an impact, and certainly would have had an impact if we were trying to raise money around that October, November.
And Hugh, sticking to Cote d'Ivoire, your company Montage Gold was recently spun out of, or you guys acquired these assets in Cote d'Ivoire, and previously I gather you were with Orca. So what's the difference between raising funds, you know, to advance, you know, a development project in Sudan to doing what you're doing right now with Montage Gold in Cote d'Ivoire?
Yeah, I think the whole Sudan thing, it's you know, Orca's been really funded primarily from insiders over the last few years because of the politics of Sudan and waiting for it to come off the state sponsors of terror list. You know, we looked hard. It took us a while to decide to spin the assets in Cote d'Ivoire out. Really trying to work out the best way of doing it, trying not to just, you know, create another cash-strapped junior. And eventually we sort of got there 2019. We, you know, I think it goes to some of the questions you've got coming up a bit later, you know, building up that sort of background of strategic investors to backstop not just the first round of financing, but the later financing. And to, you know, speaking to some of what Glen said, you know, we listed Montage in October, a couple of weeks before the election, which was a relatively hard time to do it. But I think, you know, if you have that backing, if you have a decent project, if you have the management team behind it, and a country that is popular like Cote d'Ivoire, it is a little bit easier to raise that money.
So getting to, you know, raising money, like Cote d'Ivoire seems to be pretty popular, but you know, when you get into something like Namibia, which is, you know, a different part of Africa, with Heye, Daun, the CEO of Osino, how do you discriminate or let people know that, hey, this country is different than those countries that you're thinking about? Africa is not just one big, you know, monolithic sort of geopolitical risk.
I guess you're asking me, Joe.
Yeah, sorry.
The good answer is you keep banging the drum. That's what I spent a lot of time doing, promoting the story as much as I promote the country. And I think it has helped, but although, you know, most people are familiar with Namibia, but certainly helped that Namibia is seen to be, you know, a more favorable corner of Africa. But I agree with you, what you said there earlier. You know, if you've got the right team, the right project, the right strategic backers, in our case, Ross Beatty, then things come together. And also, I guess, the project being somewhat more advanced. I mean, not long ago, we were maybe where Glen Parsons is now, more at the exploration stage, and I found it significantly more difficult to raise money then. But as the project gets better defined, it seems to be getting easier. But then again, you know, just the timing in 2020 with COVID and everything, all of a sudden the sentiment was back there, and all of a sudden it felt like anything was financeable. So I think different factors at different times.
Right, and then getting to Altus strategies, which is completely different, where you're basically using other people's money predominantly to fund your projects, and you're diversified throughout Africa. But now you've added a strategic investor. So I guess, like, now from your point of view, Stephen, how do you work that geopolitical risk?
It's a good question, Joe. I think we've got good diversification, really. We're effectively in 6 countries in Africa. And I think the earlier part of your question related to, is it easier to raise money for Africa or not? And to be fair, we haven't had a great experience raising money for outside of Africa. Our experience is inside Africa. The diversification is important, but also the asset stage diversification, not just the geography, not just the politics. And I guess that's what we offer our shareholders, is that balanced portfolio approach, not just pure exploration.
So you're talking about stage, a little bit of commodity, as well as geography.
That's right, yeah. So, I mean, we think of ourselves as a royalty generator, so we're as much focused on the discovery as also the back end, when you get paid from the eventual production from the mine. And so we have a little bit of a different psychology when we approach projects. We want to make the discovery and, as you say, use third-party capital to advance the assets, and allows us to go on and look at other projects.
And your ability to promote Altus strategies, I guess, I'll ask everybody this question, is just like, how much promotion is too much, not enough? I mean, there's a lot of work you guys have to do, and how much do you spend promoting what you're doing? Do you think that you spend too little and should be doing more, or do you think that you spend, adequate?
So I'll go first on that. It's a good question, because I think all the people on this panel have got distinguished careers in the industry, and the previous 8 or 9 years to the one we're in now, and the one that's just gone, were fairly horrific. And any amount of promotion didn't really make any difference to your share price if you were listed, or your ability to raise capital if you were private. It all came down to having a core set of strong shareholders who are willing to support you as a team, and had belief that the cyclical nature of the industry would mean that at some point in the future, always next year, but at some point in the future, the market would turn and the assets would go back to being at fair value, or ideally at a premium, so they can exit and make a very decent return. So it's important to have core shareholders, and I think that goes without saying in the downturn, but it's also essential during better markets. So that's a key element that is there, is having the good shareholder backing regardless. And promotion, you have to do it. It's critical. You have to get your message out there. Altus tries to get it. Obviously, we're listed on 2 exchanges, but you can go too far, and companies that focus too much on promotion, arguably for the right reasons, get downgraded slightly, perhaps after a little spike, but you have to deliver consistently over the long term.
All right. Well, hey, getting to you, you were talking about pounding the table on this. So in terms of promotion, is enough? Is you can never do enough? Is that the way you think? I don't want to put words in your mouth.
No, I think I kind of agree with Steve. He said it's a long-term thing. You got to do it, and eventually the pieces come together. So while you do it, especially in a quiet market where the sentiment isn't good, it feels like you're sort of shouting into a forest and nobody's listening. But eventually, when the market comes around, that's when it pays off all of a sudden, and I think that's when it comes together. So, I mean, to me, that's sort of keep on getting the message out there is important. I try to do as much as I can, including talking to individual retail investors, etc. But there's obviously, it's only 24 hours in a day. But there's the other side of promotion, which we know from the cannabis and Bitcoin and from the other sectors, and even our own sectors, where there's the sort of dirty side of promotion, and I don't believe in that. Paying people to the ramping of stocks and that's I think what a lot of people think about when they hear promotion, and I'm not too much into that.
Yes, I mean, the thing is that we, as investors, we say, oh, that's a highly promotional company, but then when we complain when somebody doesn't promote it enough. So there's got to be a happy medium there somewhere. To Hugh, who's starting a new company that, you know, maybe a lot of people don't know of, what is your strategy to get people to know about Montage?
I think you've got to go out pretty hard from the start. Obviously, you go through the IPO process, you raise your money. You know, there's a little bit of retail in there. You do a couple of calls, but as you go through the process, and especially if you've got some larger shareholders, you know, you're obviously concerned about liquidity. So you do have to get the word out. And as Glen said there, you've got to, and Heye said, you've also got to educate people in Africa in terms of, you know, the perception of political risk in these places. A lot of specifically North American investors are more nervous about parts of Africa, and you really got to keep, as Heye said, pounding the table to make sure that people get the message that is often just a perception and not generally the reality all the time.
To Glen, I mean, you were previously the CEO of Mariana Resources, and that was the Hamadan deposit and discovery in Turkey, but you were listed also in London. But I see your new company, Awale, is not listed in London. Is that a help or burden, or do you think you need that listing? Because I find that, you know, you have to explain Africa less to the UK crowd and the Europeans than you do to the North American crowd. Do you think that helps, that or potentially would look into?
I think in our case, probably a dual listing might make a lot of sense, specifically with the history of Mariana, Hotbed. You know, that was, and again, if you know, trying to link it to Africa, that was a project in Turkey in a bad time, but it was obviously a fantastic project, and it sold itself in a sense. So the jurisdiction became sort of, we might have been discounted slightly for that, but so again, you know, raising money in for Africa and promoting Africa. You know, obviously we're promoting a good, you know, obviously you want to make a good discovery, and ultimately a good discovery similar to Hotbed will sell itself at the end of the day, and that's what the whole panel of guys here, you know, that's what we're really trying to do at the end of the day. Our project is hopefully better than the next. So I mean, from a promotional side, though, for us, you know, obviously we started off as greenfields in a bad market, so it's quite hard. Yeah, it definitely was hard getting money, and you sort of are marketing continually. We're not, as everybody here, we're not over promotional. We really do believe in, you know, we have to deliver and get that momentum. So I think that momentum is key. Obviously, you know, the story's got to hang together, and then it certainly makes it a lot easier to keep on pushing that message, and the message is consistent without having the volatility. We just have a little bit more volatility at the moment, just because, you know, we're a little bit earlier.
And you know, with COVID, you know, since PDAC was live last year, we haven't had obviously very many, if not any, live events, and so a lot of it's more like this Zoom. And you know, it seems like your time is infinite to do these you know, because you know you don't have to travel much anymore. Do you find that you're doing a lot more of these, and are they beneficial? Do you find that sometimes you seem to be doing too many of them, or how do you approach this? Because it's hard to get a feeling when you're not live in a conference to see how many people are coming to the booth and things like that. Do you how do you manage?
We just try. I mean, at the moment, we're sort of trying to obviously build an investor base, a solid investor base, a supportive investor base. So we find our marketing on the one side is probably a lot more focused marketing. Probably, you know, not necessarily big panels of Zoom. They are pretty tight, and we're just slowly building those those investors that would probably support an underlying growing business. And we do have retail on the side as well. We certainly have a lot of retail, and there we try and be a little bit more, you know, generalistic in terms of our approach.
So Hugh, I see your financing or your IPO was that non-brokered?
No, it was brokered. We did it back in October, and we did the full Zoom experience for a week. I think we did about 40 hours of Zoom over a period of 5 days as part of that IPO. So I think the whole Zoom thing works pretty well. It's you're connecting at the same time from your office without any traveling with people in Vancouver, in Nevada, in Australia, in Germany, all over, and it's a good way of doing it, especially, as you're doing at the moment, sharing a screen. It just tends to work. It allows you to fit in with a lot more people a lot more easily, I think.
So doing that IPO with a brokerage firm, are brokerage firms back? Are they adding value, do you think, in terms of what you...
Yeah, I think in this case they did. They brought in some of the retail side of things. The financing went pretty well. We were, as Glen, we were sort of 2 weeks before election, a relatively low grade project in Cote d'Ivoire, and the whole financing process went exceptionally well, I think. So between the different lines of the syndicate, it went very well, I think.
Do you find that because people tend to trade all over the world on whatever exchange, that you don't need a dual listing anymore, or a triple listing, or is that still something you're considering?
We've always talked about London. As you said, London tends to be a place where people are a bit more comfortable with the African space, but never really sort of got to the point of doing it. So I think most of our history, the history of the people we work with tends to be in North America and Canada specifically. So we've tended to sort of stay closer to home, as it were.
With Heye, on Osino, when you did your bought deal, you obviously had the brokerage firms, and as you're advancing the project, is that important to get coverage for Osino and to get the news out that way? Do you find that that's helpful?
For sure. I think the key, obviously, with the brokers is they need to see the potential to earn fees. It's normal. We all know that's what motivates them. But that's okay. I like them because I think in our case, having strong equity capital market support, broker support, has been essential to our story. And especially my partner, who's based in Toronto, has been very helpful in maintaining and building those relationships. Like, for example, we did 2 board deals last year, which was a little bit unusual for a sort of explorer stroke developer. I'm proud we did it, and it solved a lot of problems for us, but we wouldn't have been able to do it without strong broker support. And of course, the brokers, in order to raise money, you need to be able to spend it. And that's why with us going into a big drilling program and spending more money, we could justify taking the money. And so that came together nicely. So those board deals really worked well for us.
Okay, but I see, you've got, initial strategic investor and Ross Beatty. So, just coming to you, like, how important is having that strategic investor, and do you need that even more if you've got an African-based asset, do you find?
I think the strategic opens doors, but often he doesn't necessarily write the lead orders for the follow-on financings. He follows, or they follow. And yes, if we were really in trouble and struggled to raise money, I'm sure that Ross in our case would write the lead order check, but usually you have to do the work yourself. So having that sort of strategic is mainly a door opener, and it gives you the cachet to attract the attention that you need, unless you've got a unbelievable winning project that sells itself. Which, I mean, of course we do, but I'm just joking. We do have a great project, but having Ross there, especially in the beginning, was extremely helpful because it just ticks a huge box for a lot of the investors that are further away, that don't know Namibia, don't know the project, etc. So I think that's the kind of cachet that the strategic brings.
Getting to a strategic investor, a big transformational transaction that happened, I mean, towards the latter part of last year and the beginning of this year when it closed, was La Mancha coming into Altus Strategies. And for those that may be aware or may not be aware, La Mancha is a big investing firm, that family office that that's going to put 200 million into this Endeavor Teranga deal. So how does La Mancha coming into a company at that time that probably had a market cap of about 15 to 20 million, how did that change Altus Strategies, Stephen?
Well, it was transformational in all the right ways, and we had to make a big decision because they needed to take a stake that was meaningful in terms of a percentage of the company. And also they needed to deploy some capital that was meaningful to us, but we felt our share price was not where it should be. And we felt as if the market conditions would be improving over the next couple of years. From back then, we couldn't foresee how it would improve so dramatically, so quickly. And we had to make a decision. Was the dilution counterbalanced by the strategic nature of the investor? Would it be net accretive to shareholders? And we decided as a board that it would be, and that's the way it's proven to be so far. The market was a bit slow to catch on to the fact that they had made the strategic investment. Obviously, we are a very small investment compared to the balance of their portfolio in, say, Endeavour or Golden Star, but they have big ambitions for Altus, as we do, and the benefit of having them there is not just obviously the firepower and the capital that it gives us, and that in itself gives us lots of opportunities that we previously couldn't consider. They also have the cachet, to use Heye's word, that's a very good way of putting it, that allows us to go into countries that we previously might not consider, allows us to look at deals that are maybe too big for us as we would have been back then, and allows us to have the vision and the foresight to see how we can make this a company that one day they can put $200 million into Altus. So that has changed us dramatically for the better. Some people do worry about having strategic investors and that they might represent a blocking vote or in some way may prevent value creation. We had to take that as a concern and discuss it. And we're very comfortable in the way that La Mancha approach their business and how they do their strategic investments. They are primarily, if not solely, driven by share price performance. And in that regard, it's to the benefit of all shareholders to maximize the value of our share price. And that's what they're interested in us achieving. And they will make sure that happens. It's not as if we were having a strategic investor who was a mining company, which then that may be seen as a blocking stake to doing deals with other mining groups. So it's a bit different from that. Sorry.
Okay, sorry. Yeah, no, you're right. So, hey, I mean, you've raised, a significant amount last year, and you're doing a significant amount on the ground with respect to your projects in Namibia. Like, where do you see, like, your share structure? How important is that when you look at it? Because I mean, one thing that Stephen, we can go back to Stephen really quickly. One thing that came out of that transaction that you did with Altus is you did a consolidation of 5-to-1. So I guess how important is that share structure, trying to maintain that share structure in a junior like yourself, important? I'll go to Stephen first, then move on to Heye.
That's a really good question because it's about optics, and it's really you're helping other people sell your shares in many ways. And you look at the Australian markets where we're not listed, and you often see companies with more than 1 billion shares out. In fact, it's probably the norm. In London, traditionally companies have in the hundreds of millions, and in North America and Canada, it's usually 100 million, less than 100 million is considered to be a good tight share capital structure. Of course, in the scheme of things, it makes no difference whatsoever. It purely comes down to the optics of the market. We decided to do a 5-to-1 consolidation because we thought optically it would give us a higher share price notionally, which then would mean that other investors would consider us to be a more credible company rather than being a share that's trading in the cents. So to that extent, I think it's important, but it doesn't create value in itself. And often it's said that immediately following a consolidation, there will be a pullback in your share price. So you have to be prepared to suffer for that. It's not always the case. It happened to us a little bit, but then you have the COVID situation. And now we're pleased that we did it. We have 70 million shares in issue. It's a good capital structure. It looks good. And we're trading about 130 in Canada, about 70p in the UK. That's fine, but ultimately it's synthetic.
Okay. And to you, Heye, in terms of the share structure, issuing warrants, and how do you look at that when you're raising money? Like, one thing is to get that money to be able to run your programs, but then seeing the dilution impact, how do you play that in terms of how much do I want to take? Because last year what we saw, and yours specifically, amongst many, has been oversubscribed, upsized financing, cutting people back. So what's this point where you say, okay, that's enough, we'll wait because I've got enough to do like 12 months of work, 6 months of work? How do you look at that, Heye?
I don't have it's an inexact science, but I guess it's the balance between looking after your shareholders. A lot of shareholders obviously most shareholders don't like dilution, but as a CEO, and in my case also as a significant shareholder, you also have to employ prudence. I think I called it before in an interview, means you have to make sure that the company is funded, that you can see through your programs, and you have to quite often overfund a little bit just to be sure, so you can tie yourself over some bad markets. So in our case, like last year, we raised $24 million. Probably we didn't need all of it, but what it did is it gave us the confidence that we could kick off a major technical program. We've got 10 drill rigs running. We've had 10 drill rigs running now for 8 months. We would have never been able to do that without the confidence that extra capital in the treasury gives us. So that's why I think that's just, as a CEO, you got to strike that balance. Just briefly on the warrants, yes, it's true. We do have a fair amount of warrants there. And I went into this game, this junior mining promotion game, not liking warrants very much. But I have learned that, for example, in order to do board deals, which come with many other advantages and so forth, sometimes the warrants are like what the brokers call the secret sauce that you need to deploy. And we did it. It worked for us. It's got disadvantages, obviously the dilution, but the advantages, it's kind of a built-in financing mechanism. So, and the North American, especially the institutions and retail, they really like it. So I've come around. I see it as a necessary evil, but it is sometimes what's required to get the deal done. And in that sense, for us, it's worked.
And when you're looking at, talking to brokerage firms, the Canadian companies or people with assets in Canada have that advantage with flow through that everybody else does not have. And so I guess that sweetener with the half warrant makes it more competitive and gets you access to people. But one thing I want to follow up with you is that, striking when the iron is hot, or that Lassonde term is like feed the ducks when they're quacking. Were the ducks quacking all of 2020 for you, Hey?
No, they were quacking basically in January after the gold price ramp up at the end of 2019. You'll remember, I can't remember, was it Korea or the US, whatever. Something caused the gold price to run up at the end of 2019. And all of a sudden in January, the financing window was open. We took advantage. We did our first board deal. We prepared for it. We expected it, so we were ready. And then we carried on operating. Then COVID came and the gold price sold off. And shortly after, gold price accelerated again. And all of a sudden the window opened again. And as we saw on your own slides, it opened that summer financing windows. And I think just about everybody cashed up and financed. So definitely, as always, the windows open and close. And so I think they opened twice last year, and we took advantage of that both times.
Okay. And to you, Hugh, I mean, you were bringing out this company, as Montage Gold. Was timing in terms of the ducks quacking or seasonality, how did that enter into, hey, this is a good spot?
No, we were very, very conscious of that going in through the whole process. It takes a couple of months more work of getting everything ready for the IPO and the listing and the financing. And I think we probably just snuck in under the wire there towards the end of it. I think a couple of weeks later, we would have struggled a lot more. It went pretty well. But yeah, no, definitely, I think you do have to strike while the iron's hot. And yes, a couple of weeks later, I'm not sure how it would have gone because the door was closing as we were doing it, I think, or starting to close.
And Glen, I mean, you also took advantage of the summer to fund your company. I mean, not at the same level, but is that something you always think about? Okay, what's the next catalyst? Am I going to have that deliverable before I need money again? Because the worst thing is to go into it with zero, or you're running on fumes and then go back to the market, or they know that you're coming to them. So how do you manage that?
Yeah, well, I think in our situation, it's a little bit more difficult than the other guys in the sense of, we've got a low market cap, and obviously, the ability to raise money, or the quantum that you require to really push hard, starts becoming a little bit difficult to manage. So it is a juggle. There's no doubt it's a juggle. We struck while the iron was hot. Again, the market, we had a discovery end of 2019, and it's looking like it's coming together quite nicely. So we did have a story on the back of that to be able to fund, and we saw that June, as really sort of spiked up as we were going to go into drilling in the second half of the year. And so that's, you just do, we had to give away a full warrant. So that is dilution. But as Heye said, it's, for us, it's another $6 million at a quite a reasonable price, which will probably start coming in as we move forward. So that does give us that funding opportunity for us. And then obviously we just got to keep on managing the programs and hopefully get the market cap up to a level that you can actually sustain a proper raise.
So in terms of raising money, do you see any
Lost you there, Joe. Lost you? Lost the question?
Joe, just say the question again. You were cutting out for a couple of seconds.
Looks like it's Joe's line.
Okay, that's unfortunate.
There you're back.
Yeah. Okay. Just in terms of, do you see new sources of funding, African assets? Do you see money coming from the Chinese in Africa and certain parts of Africa, obviously? So are you sort of new sources of funding?
Who's that directed at, Joe?
For Glen. We'll start with Glen.
Okay. Yeah. I mean, in terms of the register for us, it certainly is as the story evolves, we are been able to attract a broader and broader audience of investors. Obviously, it's key to try and see, where the money is coming from. We aren't at the moment, in the past, we've been specifically probably more self-funded or insider funded, strategically funded. But as the story grows, you start pushing out, and that's where our marketing efforts have gone. And I think you're trying to tune yourself to that. And obviously, we do need to also expand into the local Canadian market, which we did in the last financing. So we do try and attract, the funding from those new sources as and when we see that happening. I didn't get all your question there, Joe, because you did break up. So hopefully I've addressed the answer.
Okay, thank you very much, and I apologize for the breakup of the Wi-Fi there. But Hugh, going on to your IPO, did you look at, how much institutional equity do I want? How much retail do I want? Do I want a strategic investor at this point? Do I eventually want to dilute Orca down to 20%? Is that something that played into the calculus of the IPO?
Yeah, specifically the strategic investors did. We had a fairly significant president's list, which obviously was good, we felt. Obviously, the people on the list that you've got on the screen there, between Lundin and Sandstorm and Ross Beatty and some other investors, it did make a difference. We had a reasonable retail component, but the bulk of it was institutional. But I think we were keen. I think one of the problems when you have strategic investors is a lot of the stock gets tied up. We've probably got close to 50% of the stock tied up with sort of major investors between Orca, Lundin, Sandstorm, and the others. So having that retail component is important because it's one of the ways you're going to generate some liquidity in the stock. So we were keen to try and keep some of that, or as much of it as possible. And I think there was when there was cutting back done. It was done in quite a strategic way to be able to sort of give some of that retail a bit of a preferential share.
And just to understand, like when you looked at Orca and a project in Sudan versus a project in Cote d'Ivoire, did your potential investor base change?
As I said, the Orca story is too tied up with Sudan politics, so it hasn't really been able to. Until now, I think, we've come off Orca. Sudan has come off the list of state sponsors of terror now, so it is opening up. I think the next, as we go forward, it will go back to more traditional forms of financing. But in the past, it generally has been, insiders, strategic investors that have sort of kept the financings going while we've waited for the politics to sort itself out.
Okay. And to Heye, you've obviously raised twice, bought deals. So the brokerage firms brought you the clients, but do you see, like now with your ownership, more institutional, more retail, a good mix? Are you happy with your liquidity in that, given where who's got your shares?
Yeah, we got a good mix. We're about a third insiders, about a third, which includes Ross PT and RCF, about a third conventional funds, institutions, and about a third sort of high net worth and retail. So generally speaking, I mean, you want investors that buy your shares and hold them, but you, as you said there, you obviously want liquidity as well. So and the retail, it ebbs and flows. At the moment, certainly in our stock, it seems like it's ebbing. I don't see the chat rooms. Everything's gone quiet. It might just be a reflection of the market. But going forward, I think we'll probably generally try to improve the quality, and by that I mean try and attract further institutions. But at the same time, I'm never arrogant towards retail. I think retail is extremely important. I make a big effort to speak to lots of moms and pops because they're the ones that trade it on a day-to-day basis.
Okay. And to Stephen, like bringing La Mancha in that own a significant chunk of Altus, is that helped or hindered your liquidity?
That's a good question. I don't know. You could probably do some sort of further education study on it to work out whether it does or it doesn't. It certainly increases the visibility of the company, which potentially increases your exposure to new investors, which potentially results in more liquidity. We have the board of Altus have about 20% shareholding, the Mantra at 35. We have a German investment group at about 10%, and then plus some others. So about 70-75% of the shares are quite tightly held, and the rest are with high net worths and private investors. We probably do need to increase the number of institutional investors on our register, but there's a bit of chicken and egg there. They would traditionally not invest in a company as large as it was a year ago. They need to have a larger market cap in order to be able to deploy into some size to make it meaningful for themselves. So you have to get bigger in order to attract the right kind of institutional investors. We're now at that sort of scale, so I think that's probably something we'll look to achieve in the next 12, 24 months, try and get them onto our register in some shape or form. We're always, the private investors are critical, as Heye says, they're the ones that trade your shares. Nothing beats good news flow. Good news flow gets you into the press, and it gets people to recognize that you're an undervalued stock, and they traditionally then buy your shares. And that movement itself is what can then trigger further liquidity. And before you know it, the chat boards or whatever are talking about you, and people are making noise about your stock, and people are following you. So you do need good results, and you can try and choreograph your share register in the optimal way. We think we've got a very decent structure to ours. Maybe there's a better way. It's all part of the natural evolution of running a company that hopefully grows from being a $5-10 million company to a $500 or $1 billion company.
All right. Well, I'm going to probably end it there. Just want to know if you guys had any ending thoughts about where your company is and what you think to expect into 2021. We'll start with Steve.
What to expect for 2021?
Yeah.
Do you mean in terms of market conditions or for our company specifically?
I would say for market conditions, and then quickly on your company as well in terms of what a potential investor would want to look for Altus.
All right, excellent. Well, market conditions, I think that most people on the panel would agree that gold is probably in a good space right now, and we expect that to continue to be the case. There's obviously lots of stimulus around from all different quarters. That's going to result in, we believe, significant anticipation of inflation, if not inflation directly, and that will probably flow through into gold price being strong, probably not as good as Bitcoin. Who knows what that's worth. And then you've got the EV battery metals, copper primarily, we think will do particularly well, but so will the rare earth elements and nickel and other such metals. So we're quite bullish for a good commodities outlook. We're quite bullish for an Africa outlook. We think there's lots of new capital, new drill rigs are turning in Africa, and new discoveries are going to be made, which is going to drive some appetite. And Altus wants to be right at the center of all of that. We're, as I say, in 5 or 6 countries. We want to be in new countries in Africa in the course of this year. We've got the drill rig turning right now on one of our properties by ourselves and another one by our JV partner. So we're confident of some good drill results, some good partnerships, some new countries, and potentially some strategic deals as well.
Okay, thank you. Hey?
Yeah, I won't comment further on the market. I think Steve did a great job there. I'm focused on gold only, and I think I'm very excited about 2021. I think last year was good, and this year should be the same or better. So macro picture wonderful, and I think only just unfolding. But at the same time, I think sort of internally, we will have a big year and a very exciting year because we're gearing up to put out our maiden resource in the next month or two. It should be significant, you know, in the 1.5 to 2 million ounce range. Obviously, non-43-101, etc. What I'm saying, it will be 43-101 when we put it out. And we have a PEA in April, ongoing feasibility studies and project development. So I really think we'll transform firmly out of the exploration space into the development space. So we're really excited.
Okay. Hugh, with your new company coming out, Montage, what do you expect, or what can people expect in 2021?
I'm going to pretty much paraphrase what Heye said. You know, we're a couple of
do
weeks
his
away
catalog?
from our next resource calculation. We've got a PEA due at the end of March. We did take a little bit more money off the table than we needed to make sure that we could go through the whole of this year and into the next year. When we did the IPO, and should ideally, well, the plan is to take the project in Côte d'Ivoire all the way to the completion of a feasibility study by the end of the year. So it's going to be busy.
All right. Glen, with your grassroots projects in Côte d'Ivoire, what should people expect?
So from we know we're operating on two fronts, one on the western side and one on the eastern side. We have the early stage discovery that I mentioned at Odieni up in the northwest. It's along a 20K structure. We know it's mineralized, so the plan is certainly to build ounces along there. So that's in play. We've just finished a drill program now. We'll probably we've done some auger work. There's some new anomalies coming out of that, and be ready to drill those again. And then on the northeastern side at Bonjuku, we've effectively got probably about 14 targets, defined targets that we hope to be drilling in the second quarter. And you know, from a discovery perspective there, we really do think we're in a gold camp, and the potential for at least one, possibly two discoveries, you know, we'll sort of put our heads on the block for that, and we think we can do it. So that's exciting times for us.
All right. Well, thank you, gentlemen. Thank you. We'll put that as the end of this panel on financing Africa. Thank you very much to Glen Parsons, CEO of Awale Resources, Hugh Stuart of Montage Gold, Stephen Poulton of Altus Strategies, and Heye Daun of Osino Resources. Thank you very much, gentlemen.
Thanks, Joe.
Thank you.
Thank you, Joe.
Thanks,
No
Joe.
worries. And thank you for listening. We'll talk to you guys later. Cheers.